It's a lot of hard work building a business, and seeing this, it's tough.
And we could see fireballs just rolling up the street.
Really scary when you can see the flames coming up over the houses. It looked like pandemonium.
I'm a retired firefighter, so I know the dangers. When it's a wind-driven fire, there's nothing now, very little we can do.
It's definitely tough. There's a lot of people who don't have insurance.
As those that lost their homes try to figure out how, or even if, they can rebuild, they'll be turning to their insurance companies. J.P. Morgan estimates the insured damages covered could exceed $20 billion, which would make these the costliest wildfires in U.S. history. So could this push California's insurance market to its limit?
This is speculative and shifting day by day, so we're not sure exactly where it's going to land. But the insurance industry that have looked into this and looked at the impact on their book are not running for the hills.
Jerry Theodoro is director of the Finance, Insurance, and Trade Policy Program at R Street Institute, a D.C.-based think tank that promotes free markets. Like Theodoro, S&P Global Ratings says the insured losses from the LA fires should be manageable. In part, that's because it's not just the primary insurance companies bearing the losses, it's also the reinsurance companies that back them up.
Estimated insured losses are $20 to $30 billion, and reinsurance is going to take a big piece of that, risk that's spread all over the world. Bermuda, London, continental Europe, the Far East, reinsurance companies taking a piece of the pain. So a big company like the Farmers, which is the second largest insurer in California for homeowners, has got over 100 reinsurers on its reinsurance panel.
As the ones insured, homeowners are the first step in a ladder of risk that starts with individuals or businesses, goes up to insurers, then to reinsurers, and ultimately can hit investors or even taxpayers. With each step, the risk is calculated, changed, repackaged, and spread around. But one thing we know for certain, it never goes away. Instead, it's increased, and with it, the premiums have also been on the rise.
It's a tragic event, and it's one that the insurance industry, I think, is prepared to deal with because of this incredible distribution of risk. I mean, think about having 100 reinsurers on your panel. Lloyd's syndicates, big guys, big reinsurers in continental Europe, Bermuda, the reinsurers there, some U.S. insurance, Korea, China, other countries too that have got reinsurance companies that take a bite out of the apple of a company that is ceding its risk to the reinsurance market so that it pays up to a certain amount. This is the most that we're prepared to lose.
Swiss Re is a global reinsurance company, and our clients are insurance companies. We partner with insurance companies to protect their balance sheets.
Monica Ningen is CEO of U.S. Property and Casualty Reinsurance at Swiss Re, one of the largest reinsurers in the world.
When it comes to reinsurance rates, there is an impact from climate change, but it's relatively small. The other factors being economic inflation, wage inflation, inflation of construction, plays a big factor, especially in the last few years. We see people moving to areas that are more prone to catastrophes. We also see people moving into forests that are, of course, impacted by wildfires. So there's a big component of it that comes from just people living in places that are more exposed to catastrophes.
With the help of reinsurance, insurers may be able to cover the enormous losses in Los Angeles, but the owners of homes and businesses will pay part of the cost through higher premiums. Across the country, insurance prices have surged over the past 2 years. Since the beginning of 2023, the cost of homeowners insurance nationwide has climbed over 21%, while CPI rose just 5%. The price of some commercial insurance is up nearly 15% over the same period. After 7 of the 12 major companies writing policies in California cut back on their coverage, California recently changed some of its regulations, specifically to let insurers take into account higher rates paid to reinsurers and to use forward-looking models to project losses like those suffered in LA. But as efficient as insurance and reinsurance may be at distributing the risk up and down the chain, the best remedy by far is to avoid or minimize the risk altogether. For a disaster like wildfires, that begins with enhanced firefighting capacity.
The LA County Fire Department was prepared for 1 or 2 major brush fires, but not 4. This is not a normal red flag alert.
Months before the Palisades fire, the LA Fire Department's budget was cut by about $17 million.
Unless that local government's budget has a whole bunch of just reserve, extra cash, it means that to increase some portion of those services or capacities always comes at the expense of something else. Right now we can point at water, we can point at responders, we can point at all kinds of things.
Frank Frevolt is a former fire chief who now leads the Wildland Urban Interface Fire Institute at California Polytechnic State University.
There are limits to the water system that you can expand. It's not just about getting the water someplace. It needs to have a certain amount of pressure, especially in firefighting situations. You have to increase capacity of storage. You have to improve the distribution system, and that is not cheap. You either have to lay additional distribution lines into the infrastructure, which means tearing up roads, going through other utilities, disrupting traffic, or you need to increase the diameter of the things you already have, which is really the same thing.
LA will rise, and make no mistake, I am confident that we will rebuild.
But what will that rebuilding look like? And will it be different in ways that reduce the risk of these sorts of losses being repeated in the future? Risk models flag the Palisades due to several factors, including high home values, challenging terrain, and windy, dry weather.
The more we build out into fire-prone areas, and in California, many of our areas are fire-prone. We have these very flashy climate episodes of really wet, 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 then dry, 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 hot, 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 which means that the vegetation at any given time is very susceptible to burning. And so the more humans are out there at the urban interface with this highly flammable landscape, the more likely there will be an ignition.
Stephanie Pincel is the director of the California Center for Sustainable Communities at UCLA. She points out that city planners don't have as much say in urban planning as one might think.
This is not the first fire. This is one of many, 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 many fires that has occurred. The problem is we have been accustomed to living in a certain way, and so it's very hard for policymakers to resist the desire to rebuild in exactly the same way. Urban planners have very little to do with that, in fact, because if the mayor and the governor and others proclaim that things are going to be rebuilt in exactly the same way in exactly the same places, the urban planner only has to follow they have to follow along. They are not at the leading edge.
Taking steps to reduce future risk will not come cheap, which means that there has to be the political will to spend the money that's needed.
We have to really think practically about what rebuilding can look like. The other thing is that is not talked about very much is we're a tax-restricted state, and we need to have a vigorous and serious discussion. We have to do things like public participation budgeting, give people a budget. Where would you spend the budget? Let's have a discussion about this and bring people into the understanding of what governing your place is like, and that these decisions are not easy decisions.
I'm just happy to see the community rallying together. I know everyone's been on the phone texting about how we're going to come back from this, and it's going to take a lot of effort and a lot of time, but I love Pacific Palisades, and I really trusted my home to come back together and rebuild.
But in the end, it all comes back to those experiencing the loss most directly and painfully. It turns on the behavior of those of us at the bottom of the insurance chain to determine whether and how best to protect ourselves from the next one.
So when you look to the future, I think there's a few things that will change. I think that consumers will start to better understand their own risk exposure and what their own resiliency looks like. As events impact our lives every day, consumers are being more aware than they ever have been on the risks that their homes face.
Whatever we do, do not build back in the same place in the same way, or we have the same consequence.